Hello, what's up, everyone? This is King Mozart here. With another trade review. So as you can see, the FOMC result is already out, and it is positive for the dollar. Prior before the FOMC news, we took some trades already. Already, I checked um, my FOMC result, and I saw that it was going to be positive for the dollar. So that was why I wasn't too skeptical about picking a sell, that's in is selling Euro USD. If I can remember the last time we had CPI news, and I was telling you guys I wasn't certain about the news. That was why I closed my trade. I was buying GBP USD. I had to close my trade and wait for the news to come out because I wasn't certain if it was going to be in favor of the dollar or against the dollar. So sometimes if you are certain, most times it's always because of the um the forecast about the news event, and also because of the current situation. The last time Trump spoke in an interview, he was speaking about making sure interest he would drop interest rates and inflation. So since Trump has been on board, his own goal is to always target and make sure that he's dropping inflation or interest rates. So quickly, I want to just show you guys a basic strategy I actually use to pick this trade. So basically, I use supply and demand. One, I use ICT concept. Two, I use liquidity sweep and grab also, as some people call it inducement. So just smart money concept in general and supply and demand. That's what I use for now. I don't really use the SMA 200 I have on my chart. I don't really use it every time. Just just sometimes. So when I say sometimes, it's not every time. I just have it there, but I don't really use it. So quickly, as we dive into our chart, I'm always a 5 minute guy. I always use my 5 minutes for my execution, for my analysis of the whole day. So day trading for me, the 5 minutes is the best time frame. If you master the 5 minutes, you can be able to trade on the 4 hours, on the 1 hour, on the 30 minutes, on the daily time frame. Your 5 minutes will give you a lot of candlesticks, which will create a lot of noise. But your brain has to be able to filter that noise and deep and dig down into the actual trend and movement of the market, because what you see on the 5 minutes can also happen on the daily, on the 4 hours, and also on the monthly and weekly and 30 minutes. So the same thing you see on the 5 minutes is what you can see on a higher time frame. So now diving into the chart, as you can see yesterday, right, you can see yesterday's move. I told you guys we missed the sell around here yesterday. So price didn't get to our area of demand. So I wasn't interested in picking the sells, right? And we came down to this level. Sorry, area of supply. Sorry. And we came down to this level of demand right here, as you can see. So most of you will be asking me, how do I mark my demand? I mark my demand by marking the last, mostly it's more like marking a bullish or bearish order block of a swing high. So this last red candle before the swing up, from that high of that candle to the low, right, to the low of the candle or to the low of the other candle, right, is my demand zone. So now, how do I trade my demand zone? Once I get a tap into that area, one, and we have a bullish close, my entry is there. My stop loss is below the demand level, which I also talked about in a previous video, that if you look at your chart, you can have a structural stop loss or you can have a risk per trade stop loss. So in this case now, we want to work with a structural stop loss, which is putting our stop below this low as a protected low, right? And if I want to put my own ideal stop loss, which is 20 pips, I will increase it to give it more room. So now I'm implementing my RR stop loss and also a structural stop loss. So now where can I look out for? I can look out for this high right here, which is a 1-to-1, right? I can look out for this high, yeah, and I can look out for going back all the way to this demand level. But unfortunately for us, right here, we got this swing move, we got price trading back down. And one thing I want you guys to know is, if you want to validate a demand or supply level, have we taken out a high or a low? As you can see, before I marked this level as a level of demand, we've taken out this swing low, and this low. So we've taken out all this liquidity here before we push to the upside, which means this level of demand. And as you can see, when we look backward, we can see this level of imbalance here, right? This fair value gap here. And as you can see, price traded into that fair value gap. So this level now acts as a very, very strong demand level. The reason is because of the bunch of liquidity that was picked up from here before price rallied all the way back up from an external range liquidity, which is this external range, and went to another external range liquidity. So now moving on, you can see price came back to that level, reacted. Now before we had this swing high, we had this high and we had this high. Now price took out those two highs, right? Taking out the liquidity here, coming back to this level again. We tapped this level again and we went back up. Right around here, I was telling you guys, I want to see price react like this and get to this level. Then I pick my sell to look for lower prices, right? So now we got to that level. Then you can see the way price reacted. And one thing I want to tell you guys is, this is the way I enter. Once I get a tap of that zone and I get the first bullish candle that closes above my zone I marked, that is where I'm picking my buy entry. So right around here, I opened my chart very late, so we were entering around this candlestick, right? So we would have entered earlier, which would have been somewhere around here. So somewhere around here, right? Let me off this paint out. Somewhere around here would have been our entry. And also one of the things you should take out is what current session are we entering into. So that's why we have the forex market session. It actually indicates forex sessions for you. So as you can see, we entered from this candle's close, right? I entered off of that level, then had our stop loss above here, which was 10 pips, right? Price traded, came back. I already told the charts to put their stop loss at break even. Price came back to that level, tapped our stop loss, tagged us out of the trade, and it was just so unfortunate. Now, before price tagged us out, I had this level here because this is a fair value gap. So if we want this fair value gap to be respected, one of the things we need to see is, we want to see price rejecting off of that fair value gap. And I always tell you guys, I like my fair value gap to be filled halfway. So it is at the halfway I want to see rejection. So I got this and I got this trade back into it again. So it was at this candle's close right there. I picked my sell, right? Then after picking the sell, we're looking out for price to come all the way to previous day's low 1 and also come all the way to this level of demand. right? Now, one of the things I also need to show you is we were reacting off of the previous demand level, which was this. Now, before this, I already moved my demand level because we respected this demand level. So I moved my demand level from here, right? We've tapped this already. So currently, the last bearish candle before the swing movement upward, the high and the low right there, right? As you can see, we didn't get a tap to that region. So, and we got a tap right here, and we got price come back to this fair value gap, sold off massively below previous day's low. After taking out that liquidity, we came back in that range. Then right around here, right, as you can see, we have this fair value gap here. So I marked that fair value gap also. Price came into that fair value gap, filled it up. After filling it, then we have the FOMC news that came out and pushed price lower, giving us that 1 to 4 risk management. So also, prior before the news, you would have been entering off of that fair value gap. Sometimes I make my entries on a fair value gap right around here. Would have been your entry. After filling it halfway, this would have been your entry. Stop loss would have been right above this high, which would have been a 20 pip stop loss, and you can look out for a 1 to 3 risk management, which obviously the news gave it to us. So the news gave it to us. Apart from that, supply and demand is a very, very good strategy if you want to learn. It's you seeing price move from a zone to another zone, then you picking off your trades from entering off of that zone when you see price react around that zone. And also it gives you a very, very good entry where you have tight stop loss, so you don't need to expose a lot to the market. So quickly, as we dive into GBP USD also, as you can see, prior before today, we had this swing high, right? Let me come to this level. As you can see, these highs, price broke this high, came back to this level. We had a retest of that high, right? Feeling this imbalance here. As you can see, we have an imbalance. We have a fair value gap here, came into it, tapped it, filled this imbalance also. Then we had price rally up. Now you ask me, how did I pick my my demand zone right around here? Now if you look closely, we have this high, we have this displacement, we have this candle. So right here we have an imbalance here. We have a fair value gap there, right? Come back, fast forward into the future where you have this price reacted off of that, filling that fair value gap. And after filling that fair value gap, I don't need to mark my chart all the way back then. So that's why I marked this new region as my region of a demand. Now we can now see that price went all the way. We had GBP CPI. GBP CPI came out today. We smashed that zone. We sold off. Right around here, you can pick your entry, right? From the close of this candle, stop loss above that high, which is going to be like 26 pips, or roughly you can use a 30 pip stop loss. So 30 pip stop loss ideally for me, it's above this region, and you can be looking out to target anything below 1 to 2, 1 to 2, 1 to 3, 1 to 4, depends on what you want to target. So but for me, around this zone, I can't pick my trades like this. So I waited for price to come back to offer me another level, right? To be bearish. Now prior before this, I would have sent a buy signal to the group, but I wasn't too, how will I put it? I wasn't too sure about it. We were reacting off of this demand level. Now after these highs, yeah, perhaps before we took these highs out, the last low before taking a high out is also a good level to mark as your demand level. The lows before a high has been taken out, and the high, you can mark a high that has taken out a high as a supply level, and a low that has taken out a low as a demand level, or a low that you have prior before a high was broken. So something like this. This level is a very, very good level for a strong demand zone. Now, as you can see, we have price rally back up into the supply region. And as we went into that supply region, I picked my sell right around there. Stop loss very tight, 15 pips. That was why. And at the same time, as you can see, at the same time, during that time, it was 6:35 New York time, and around that same time was when we were also tapping into Euro USD's fair value gap, 6:25, as you can see, around that same region. Now this is where it plays very, very good. I want you guys to know that DXY acts as a leading indicator for Euro USD or USD pairs across USD CAD, USD CHF. It acts as a very, very good leading indicator. Now, as you can see right around here, what was the time? 6:35. Yeah, I didn't mark it out actually. As you can see, we have this swing low, we have this imbalance right there. Price came into that imbalance and reacted off of that imbalance. Now, if we had broken this imbalance and came back to retest, then I'll be looking forward for buys on GBP and the rest. But since we react off of this imbalance, feeling this imbalance, which is our fair value gap. Now, I told you guys I use smart money concept and also supply and demand zone. Now, around this zone here, we have our demand zone here. We have this, we have first, second, third, fourth, fifth touch into that zone. Now I know that anything that makes us come back to this region, then that means we are looking forward for more sales. So that was why I wanted price to react off of this fair value gap. So if we are reacting off of this fair value gap, we need to see higher prices, and we got that, and we got to this supply region here. That was when price was retracing prior before the FOMC news event. So as you can see, that was what made me pick my sell on GBP USD right around here. Right around here, right? We had price come back to this region. We had price rally back up, and as you can see, FOMC came back, push price all the way down. So that's the way you can enter off of supply and demand zones. Yeah, so right around this region, you can sell from here, close right here, which is a very, very good trade. Is a 1 to 2, right? And after getting here, you can also decide to buy from this region, right? You get a tap, you get a close, you can decide to buy from this region back all the way back up to this high. But unfortunately, FOMC got us tagged out, so you would have gotten a 1 to 2 trade right here, but FOMC would have made you go break even. So always make sure you have your fundamental confluence matching up with your technical confluence. So whatever you are looking out for, make sure you have DXY as a leading indicator to make you see the market differently. It was because of price reacting off of this fair value gap zone, and because I already saw the fundamental news that it was going to come out positive, and I was hoping it would come out positive, and I was also hoping that we will get a one side movement, because sometimes the market could go up, take out your stop loss, and start selling all the way back down. So, but we got price react off of this fair value gap. After reacting off of the fair value gap, we got price rally back up, went lower. Then we had the FOMC news come out, and yeah, that was our trade for the day. Although we missed other setups, which was NZDJPY, we missed the sell. I called out the sell in our previous video. Also AUD on my trade review. I was reviewing most of my trades. That was why I was calling Euro Euro AUD, Euro USD sell, AUD USD sell, NZD USD sell. I was telling you guys I was looking for selling opportunities. Although I would have called NZD USD sell right around this region, but I I I was just focused on having one pair, because the last time I sent a lot of trades to the group, it didn't go out as planned. I sent about 4 trades, and all the 4 trades hit stop loss. So I want to make sure that I'll be able to be sending 2 to 3 trades in a day, 1 to 3 trades in a day, so we can be able to manage more of our risk and not risk too much. Because if we have about 4 trades and we are risking 0.3%, 0.3% times 4 means we are going to be risking around 0.12%. So we are going to be risking around 0.3%. We are going to be risking about 1.2% of we are going to be risking around 1.2% of our account, which ideally, if all the trades hit stop loss, it's not a good one for us. So, but still, with good trading and good risk management, we should be able to be profitable overall, even though we are going to be down in number of trades. But in how will I put it, in the area of ROI, we are going to be up. So currently we are still down. We still hope tomorrow we get good trades tomorrow and next tomorrow, and so on and so forth. So I hope you find this video insightful. Stay blessed. BTS out. Thank you.